perspective. The Indian economy is expected to grow 6.5% in the current financial year ending March 2022. This according to the United Nations World Economic Situation and Prospects 2022 report, which states that India's economic recovery is on a solid path amid rapid vaccination progress, less stringent social restrictions, and still supportive fiscal and monetary stances. Further, the GDP is expected to expand by 6.7% in 2022 after a 9% expansion in 2021 as base effects wane. At the same time, the report also cautions that while robust export growth and public investments underpin economic activity in the country, high oil prices and coal shortages could put the brakes on economic activity in the near term. In perspective today, we will analyze with experts the key points made in the UN report on the state and growth projections of the Indian economy, the impact of the ongoing third wave, and the road ahead for 2022. Joining me are three distinguished panelists, so let me first introduce them to you. I have with me Mr. Nilesh Shah. He is Member, Economic Advisory Council of the Prime Minister of India. Professor Charan Singh, CEO of the eGrow Foundation, and Rajni Sinha, she is Chief Economist and National Director, Knight Frank. Thank you to all my guests for joining me on this edition of Perspective. Mr. Shah, allow me to begin the program today with you. Since the United Nations World Economic Situation and Prospects 2022 report pegs India's growth at 6.5% in 2022. Now, on the other hand, we've seen just a few days back, the World Bank, in fact, in its projections said that India's growth is projected at somewhere around 8.3%. The Reserve Bank of India projects India's growth somewhere a little over 9.2%. Now, given the current situation that we are in, sir, amid the ongoing third wave, cases are now hovering above 2.5 lakh every day. Although it is expected to be a shorter duration wave, but what kind of impact could it have on the recovery, on the economic recovery? And what is the kind of assessment that you are making for the growth of the Indian economy for this remaining financial year?
The variation between growth estimate of RBI, United Nations, and the World Bank is essentially coming from some people are talking about financial year 22-23 like RBI. Some people are talking about calendar year like United Nations. We believe India today is in a far better position on certain counts and have certain weak spot also. Today, trade, agriculture, private sector investment, exports, these are all way above pre-pandemic level. However, consumption continues to remain below pre-pandemic level. We believe in next year, if Omicron, which is right now creating record number of cases, does not disrupt economic activities because hospitalization and death rates are low, then India should get a good chance for a high single-digit growth. This will be both for calendar year as well as F5 financial year.
Okay, Professor Singh, what are your views? Because what we are going through, even though the cases are high, but thankfully the impact is not as adverse as we have seen in the previous two waves. But disruption of any kind does have either a midterm or a long-term impact. Do you see the current ongoing wave, the third wave of the pandemic in the country, denting the recovery that we have made so far and also the future prospects?
Will there be a marginal impact in fourth quarter GDP growth? Answer is yes. The street is estimating an impact of between 0.3 to 0.5% in fourth quarter GDP, which on an annualized basis will be somewhere around 0.1%. We believe our long-term prospect continues to remain supportive. Housing and real estate has degrown over the last 10 years in India. Now, with work from home creating demand for housing, interest rate on housing loan coming to as low as 6.5%, and affordability improving in housing sector, it should start adding on an incremental basis to GDP. The production-linked incentive scheme also is showing positive results. In FY 2015, India was importing $8 billion worth of mobile phones. Today, our exports of mobile phone will be touching $4 billion in FY21. The value of mobile production has increased from 27,000 crore to 2,20,000 crore between 2014 to 2021 in domestic market. We believe PLI scheme like housing will also incrementally start adding to India's GDP. Between housing and PLI scheme, can we expect Indian GDP to get a boost of between 1% to 2% incrementally for a couple of years to come? It is quite possible. So unless until Omicron really impacts the hospitalization and death rates and necessitates lockdown, we think our long-term prospects, our recovery is on a fine place.
Okay, Professor Singh, let me bring you into the discussion now. What are your views? How do you look at the current trajectory of the Indian economy? Do the voluntary pullbacks that we are seeing, the reimposition of curbs, going to have any kind of impact, firstly on the remainder of this financial year and then beyond as well?
Well, the situation right now, I think, is very, very comfortable as far as growth procedures are concerned. The government, because of the double vaccination, has taken some steps, but not done a lockdown. There are night curfews already in our country, but lockdown is not there. What does that mean? That output to a great extent continues to be produced. So to that very extent, then one can say that the implication on growth should not be substantial. It is true that the third wave is sweeping the country, but as you already know, because of the double vaccination, the third wave has as yet not resulted in any devastation in terms of both mortality or hospitalization. That again shows that the output trajectory should continue normally without denting the growth. In the meantime, 2-3 things have happened which I must mention. The first is, of course, the Ghati Shakti program, asset monetization program of the government are on its way and they are taking shape. The Prime Minister has also started talking of India 2047 that infuses confidence in the mind of people and planning starts. The government of India has also started thinking in terms of how to extend flow of credit into the infrastructure sector, and huge infrastructure projects are being conceived. You must be aware that in November, and even now those meetings are continuing before the budget, they need to be finalized, where the infrastructure, where both the Ministry of Shipping and Transport and Railways, all of them came into and said, this is what is required, these are the government's plans, the banks were brought in, the trade associations were brought in, that synergy is being created. So what happens in all these things when they're put together, the confidence level, the exuberance in the economy is high. The third thing, we are in the middle of a festival season. In the middle of the festival season, even today there's a festival. In the middle of the festival season, generally the confidence levels are high and therefore the economy generally takes a boost. So given these circumstances, I feel that in the present time, certainly the growth it may take a slight dent, as was just mentioned, that when the growth figures come from January to March data, there may be a slight dent. That is okay. But generally, the trajectory which has taken place in the economy has taken place on the recovery path. I must mention, and with that I will conclude this segment, if you look at the growth, and on January 26, 2022, 26-27 last week, we will have again the fresh data from the International Monetary Fund. But the latest data that they had, you have just quoted a report which was released recently. There was another report which was released earlier than that, India 2030, different reports, whichever report you take. The whole planet at this point is flatter.
Yes.
Everybody suffering from the same disease, same challenges. Nobody, rather everybody is projecting India will be the fastest growing economy in the world.
Absolutely.
It's an engine of growth for various reasons. One is the government programs that have come in. Secondly, of course, the demographic dividend that is. Even the IMF, when they last came, gave their projections. therein also you see the same thing, how growth in October, I'm talking of the October, though it's little dated now, October, how they said that the global growth is just around averaging 5.9 in 2021 calendar year. But if you look at India, India was beautifully averaging, chasing 9.5. Even if you do a little dent, as you mentioned in this quarter for Omicron, it'll still be the fastest growing economy on the planet.
Absolutely.
So we are in better times relative to the world.
Certainly. So, although there have been different variations, the good thing is that all of these reports, all of these agencies have given a bright outlook for Indian economy's growth as well. I'll come back and understand going forth what makes us different, what makes our recovery different from that of the world, as Professor Singh pointed out, and also the challenges that we may have to look for in the coming financial year. But before that, Rajni Sinha, let me come and understand from you on the recovery that we have made so far. One concerning fact is that it has not been even. There has been uneven recovery in sectors, and that could potentially be one of the challenges, particularly if we look at the stressed sectors. So in the previous two waves, some sectors had to bear more brunt as compared to the others. And as they were standing up, there came this, sudden shocker, we can say, in the form of Omicron. So although the dent, it's going to be very mild, but for sectors like these, which were just standing up on its feet, what does this mean in the times to come for services that have already been stressed and now again are reeling under stress?
So, yes, you're very right. The recovery that we have been seeing in the Indian economy is right now very skewed. So we have some sectors which are performing very well, but at the same time, we have some other sectors which are more contact intensive, like service sector, retail sector, which are struggling at this point in time. And in fact, I would also like to mention that the unorganized sector, the MSME segment, those segments have been very severely impacted by the COVID crisis. And even while we have seen the organized sector and the big players coming back to their feet much faster, the smaller players, the MSME segments and the unorganized players, they are still struggling. So it will be very important if we want India's growth momentum to be sustained. And if we want a very inclusive growth, it will be very important for the government to give stimulus measures and to support these segments, which will take more time to come back to their feet. So be it the service sector, entertainment sector, retail, education, health, or as I mentioned, the MSME segment and the unorganized sector, the government should use the upcoming budget to announce more stimulus measures for these segments to bring them to enable them to get back to their feet.
Absolutely. Mr. Shah, let me come back to you, and because it's a very, very important point. In order to, sustain that this recovery remains for the longer time, is more durable, it is important that the recovery has to be more broad-based. How do we ensure, and what are the kind of expectations that one can have for these stressed sectors now that the budget is to be presented in just about 2 weeks from now?
So there are multiple strategies to support a struggling sector. One, as Professor Charanjit Singh mentioned, we have to emphasize on vaccination so that normal life can continue. The second is direct fiscal support. We have seen how rural Manrega has provided employment and created infrastructure in rural India. Bulk of the sectors which Ragini mentioned exist in urban India. And there, if we can launch urban Manrega kind of scheme, to that extent, those people will have employment. They will have, ability to spend money, and consumption will get supported. The third is related to skilling. Today, we have seen sectors like technology, startups, where people are offering BMW bike to new joiners. On the other hand, many of the people who are employed in the sectors on the services side, they don't have the necessary skills to work in the startups. How do we bridge the gap so that there is adequate talent available for startups? And at the same time, there is redeployment happening from sectors which have been impacted adversely by the pandemic. If we summarize all these things in one format, there is a need for equity capital flows into the small and medium enterprises. the government did a fantastic job of launching 300,000 crore credit guarantee scheme that, as per SBI CAP's report, has avoided many of the MSMEs going down. But that's still debt. What MSMEs need is equity. And if we can deepen our market so that MSMEs can get access to capital, access to equity capital, then they will be in a far better position to withstand downturn.
Professor Singh, earlier on we were talking about how, all of these reports by the United Nations, by IMF, by World Bank, one consistent thing has been on how they all show a bright outlook for Indian economy's recovery. While if we look at the global picture, it's quite bleak due to uncertainties, due to multiple risks that they mention. What is it that we have done in the last 2 years of the pandemic that has now put us on way to becoming the fastest emerging economy now in terms of recovery, in terms of, how we have traversed well of the pandemic, even though we are in the third wave? All of the economists and as the panelists are also suggesting that it's going to be a slight dent, but it's not going to derail the huge recovery that so far we've made. And as Mr. Shah was pointing out, going forth to make the recovery more broad-based also, there are certain schemes in the pipeline, there are ongoing efforts. So what is it that makes our recovery procedure different from the other countries?
Will you permit me to give a little longish answer, please?
Sure, please go ahead.
I want to cover a point which has been made by the two previous speakers and then answer your question. So let me first touch on the MSMEs. On the MSMEs, all of us know what's been happening in our country. MSMEs employ the largest number of population after agriculture, right? That's one thing. They significantly contribute into exports and industrial production. But would you know that they do not register with the government? And this Prime Minister and this government has been so technically sound. They said, we are providing you incentives, but please register. If you look pre-COVID, the Prime Minister numerous times said, look, these are the incentives I want to give to MSMEs, but these are available to the ones which register. If MSMEs don't register, what can the government do? Of course, COVID hit us and MSMEs were now at a disadvantage. And the government, I don't think, discriminated. They came out with so many schemes. Rather, the non-banking finance companies, which were many a times not taking the rules that they should be, but because MSMEs were under stress, concessions were made to NBFCs so that the MSMEs can continue to survive. MSMEs also have a responsibility to play. If the government is playing its cards in such a responsible manner, it's important for the MSMEs also to reciprocate, which they haven't. So when people say that MSMEs need support, I always tell them MSMEs also need a self-regulatory body and also need to be more responsible. In any case, I have suggested, and I continue suggesting, that like the agriculture universities, there are 6,000 odd projects which MSMEs produce. They do not have the wherewithal of R&D because of their size. We need, like we had the agriculture universities, we set them up when we were food deficient. Now we are food sufficient and surplus. Now we need to set up MSME universities, not polytechnics, not IITs, not ITIs, MSME universities, where we teach entrepreneurship, we teach responsible accounting, and then we create an ecosystem where entrepreneurs come and create jobs for the rest of the country. Now I'm coming to the question which you have just posed to me. I would like to mention that as little that I know about this government, something which I learned early on when I was urging everybody whom I knew in Delhi to take immediate remedial measures when COVID hit. And I was told, and I think it is correct because I've observed it over time, the Prime Minister keeps saying, give as much medicine as is required, don't give an overdose. What does that mean? Other countries, they were overreacting. They're falling head over heel to give this and to give that. But the Prime Minister kept saying, I'll give this much. Do you remember when the finance minister came out every week with the program to sustain this segment or that segment or that segment? It meant that they were trying plasma, then remdesivir, then multivitamins, then this, trying to see they want to revive the economy. They don't want to overdose it. Why was all this being done? Because nobody knew how long this COVID will last. If you go to the earlier 100 years ago, there was a Spanish flu. It lasted 5 rounds, 5 waves. The first wave was 2x, the second wave was 5x, the third wave was 1x. We are in the third wave. The world is in the third wave now. But the government in its wisdom decided we will come out with plans which will be consistent. But if it is long lasting, we should be able to endure it. Now what the world is saying, this pandemic may take the world in crisis till 2024. 2025 will be the normal year. We're in the third wave, then will come the fourth, then the fifth, and then it'll go out. In the meantime, 22, 23 will be impacted. This responsible behavior, this dosage at the right time, in the right proportion that the government of India adopted makes us stand outside. And the world realized that our strategies are long-term. Of course, then there are the traditionals. The traditional ones, of course, which you must have heard, that we as a young emerging country, were able to produce 2 vaccines within such a short time. We were able to vaccinate. It is record. I don't think anybody else in the world has the administrative skills to do the vaccination the way we did it effectively. And now drones are being used for it. It's unbelievable how India did it.
Absolutely. And one of the very important factors which the UN report also mentions is the vaccination strategy that India has adopted. In fact, it is because of high vaccination in our country that all of these projections for high economic growth are today being made about India. But Rajni Sinha, in order to make this long-term and more durable, because now the challenge is to make this recovery consistent, to make it more durable, and apart from the logistical challenges, the supply chain issues, inflation continues to be a challenge. So in the financial year which is about to come now, how are we going to ensure that inflation is something that we have to deal with? We have to cope up so that it doesn't become a hindrance in our recovery process.
Before I touch upon inflation, a little bit more on the sustainable growth that we are looking forward to. One thing that we have to make note of is that while the recovery is pretty much on a strong footing, we need to look more closely on what's happening on the consumption front. If we look at the latest data, and even if we look at the GDP estimate that has come for FY22, what we see is that consumption, the private final consumption expenditure, is still lagging behind the pre-pandemic period. Is still lower by around 2% or so if I compare it to the pre-pandemic period. So that's where I feel, and private final consumption expenditure contributes around 50-55% to our GDP. So that's where I feel a strong push will really help in sustaining this growth, because not just will it help the consumption growth to pick up, but any pickup in consumption growth will also help this excess capacity that we right now have. It will help the capacity utilization levels also to go up, which in turn will incentivize the private sector to come in and invest. Because so far, whatever is happening on the investment front is more from the government side that we are seeing. Private sector is still hesitant. Whereas if you look at the private sector, they are very much in a position to invest because there's a lot of deleveraging that has happened in the last few years. The balance sheets are clean, so they are ready to invest. So I think that if there are more measures announced to propel consumption, which in turn will help in increasing the capacity utilization level, we will see more of private players also joining into the investment bandwagon.
Absolutely.
So that's on sustaining the economic growth. Now coming to inflation, yes, inflation is going to be a problem in 2022. And it's not just a problem in India, it's a global phenomena. Very much expected because this whole pent-up demand is coming to the market right now, whereas with this whole, different waves of pandemic, the supply constraints are still there. And because of this, and also there's abundant global liquidity because of which asset prices are going up, commodity prices have been going up. So I think inflation is here for some time. For India, we can expect in 2022, we can expect inflation to be in the range of 5.5 to maybe even 6%. So I think the central bank and government will have to make their policies keeping this in mind, around 5.5 to 6% inflation in 2022.
Absolutely. And given the current situation, as our panelists are saying, as Ranjani pointed out, that, inflation is something which is a global phenomena today amid the pandemic. The IMF, the World Bank, the United Nations, in fact, have also warned that inflation and inequality are two big challenges to pandemic recovery. And these are two factors that countries will have to take into account as they re-emerge from the pandemic and come back stronger. So with that, I have to call it a wrap on this edition of Perspective. Thank you to all my guests for joining me on the program today and sharing your perspective with us and our viewers. It was indeed a pleasure having you on the program.